Hey there guys, Brian here, brianchai.com, and in this video I'm going to be sharing with you how much do you really need to start trading. Okay, so some of you may be thinking how much do you need, right? Maybe you've been interested in trading but you think you need a lot to start with, but do you really? Well, the short answer is, you don't really need a whole lot, right? Just a couple $100 will do, but it depends on a lot of different factors, like such as what do you trade, who do you trade with, and a lot of different factors which I will be covering in this video, right? So, like I said, it depends on what you want to trade, right? Because there's a lot of stuff to trade out there. You've got like stocks, your indices, your commodities, forex, cryptos, so many stuff, right? And a lot of all these instruments, they all have different requirements and different criterias, right? Different costs, different fees. So for example, stocks, it can be a little more capital to trade for stocks because, say, for example, blue chip stocks, right? Because they are very well established already and their price is high. So that means if you want to buy just into one share of it, it can be a couple $100, depending on how much it is worth. And also, so if you've only got $100 and that one share alone already costs like a couple $100, so you buy one share and then you're done. That's it, right? There's no diversification. There's nothing else. Your investment profit and loss is going to be based solely on that one share alone, right? And that's it can be very risky if you didn't pick the right share, right? Because what happens if it goes, the company suddenly goes bankrupt? You could lose everything, or your funds could get stuck, right? In fact, it happens to one of my friend. Yeah, he invested into a company. It was a oil and gas company, and recently oil prices hasn't been doing too well. The couple recent years, yeah, the company, I think, almost went bankrupt, and then so when they go bankrupt, they've got to pay back their debtors first before their investors. That's why the funds can get stuck. Right, so anyway, yeah, that's for shares. Also for shares and stocks, you generally want to have more capital because of the fee, the trading fee, right? And for those, the trading fees are higher than other financial instruments, right? It could be like a few dollars to maybe $10 plus $20, depending on which broker you use, right? So imagine if you've got only like $500 in your account. So each time you buy, you already pay like $20. So that's a whole lot of fee to be paying based on your capital, right? The amount that you have. So that's why I would say that for shares and stocks you need more, because if you don't have enough, right, the fees are going to eat into your profit margin so much, right? Because imagine if you've got $500 and then your fees is already, say like $10, so you need to make at least $10 just to cover the fee, and in fact $20, because when you buy in one time it's like $10, you exit when you want to sell 20, so that's like $20. So before you even like do anything, the moment you go into the trade, right, you are kind of down $20 already. So depending on how much your trade is worth, right, that's you need that share of stock to go up by at least that certain percentage, at least, which is worth $20. Otherwise, it's just not worth it in the long run. So stocks and shares are more costly to trade. So what else can you start with, right, if you don't have a lot of capital? So what I recommend is forex and cryptocurrencies. So why forex and cryptocurrencies is because, say, for forex, you can start with very low, and the good thing about forex is that generally you only have to pay the spread, right? And there's no commission or no so-called like trading fee, right? So when you buy in, you just you pay the spread, and then when you exit, you just pay the spread. So what's the spread? The spread is this very small price difference between the actual quote and the quote that you get on the broker. So that's how the brokers earn their money, right? On that little tiny few pips that you buy and sell. So whenever you buy and sell, there's a very tiny difference. But the good thing about this is that if you've got a very small trading account, right, this works very well in your favor, because you can get in and out fairly quickly, right, as long as you are in profit. And the spread for Forex tend to be a little bit tighter, right? It depends from broker to broker, but compared to other instruments, right, because it's a very liquid market, so the spread is tighter. You can get in and out a lot easier, and generally, you know, it's a lot more beginner friendly, right? The same goes for cryptocurrency as well, because the denominations is really very small, right? You can have like to like 8 decimal points, right? They call it in satoshis, right? In Forex it's pips, in crypto is satoshis, right? So both Forex and crypto, you can start small because they've got small position sizes, right? Like for Forex, you've got your lot, you've got like you can also have your micro lot, right? So it's smaller, and this is the same for crypto, right? You don't have to buy like a whole Bitcoin, you can buy like a 0.001 Bitcoin. And why Forex and crypto is because you can use leverage and margin. Okay, so this applies for both, but not always for crypto. For Forex, most brokers, they are going to allow you to use leverage, right? But for crypto, only certain brokers will allow you to use that, right? Like BitMEX, right? You can go up to 100 times for Bitcoin, and for the altcoin, maybe not so much, depending on which. And why leverage and margin can help you is because how leverage works is, for example, say you've got 1 to 100 margin requirement, right? Or 100 times leverage. So what this means is that for every dollar you put in, you can trade as if you had 100 times of that. So if you put in, say, like just say $500, right, with 100 times leverage, you could trade as if you had 50,000 bucks, and that's a lot more useful than, you know, if you just trade like straight up 500 bucks, because you need the whatever you are trading to increase by a whole lot to make decent profit on that 500 bucks. But with leverage, your gains are amplified because you are trading with a lot more, right? But just something to take note is that because you trading more, so even though you profit more, that also means that you can lose more as well, your losses, right? Everything is amplified. So when you use leverage, you should take into consideration things like margin requirement or margin call, because if say whatever you are trading drops down by a lot, you could get margin call. It means you have to top up your margin. If not, you can get liquidated. It means your position or your entire account, it just gets wiped out, right? So that's not something you want. And to prevent that, I recommend at the minimum, just put a stop loss before the price that you will get stop out. I mean, like liquidated or margin call, right? Because it's just not worth it, right? Yeah. And next, it will depend on the broker itself, because some brokers, they have a high minimum deposit requirement, some not so much, right? Just a few $100 you can start. Some, I think, it goes as low as like $10 to $50, right? And you can start trading. But I would say at least you want maybe like 1,000, or at least just a couple hundred, like maybe 500. It'll be a good amount to start, because you've got like some buffer, right? You don't get let's say you are trading on Forex and crypto, you have more margin, right? So you don't get margin call, or your position get liquidated so easily, because the more balance you have, the higher your allowance, right? The price have to fall a lot lower before that happens, right? And if you don't have a whole lot of reserve capital in your account, then that margin, the price, right, it just there's not a lot of buffer. So when it goes down just a little bit, you could be out. So you don't want that, right? And also you want to have a bit of a spare capital left in case you want to diversify a little bit, right? You want to take more trades, right? Or you want to do like a dollar cost averaging. For example, you open a trade and the price goes down, so you think it's just a correction, it will go back up. So what you can do is to continue buying, right? Buy lower and lower, and then what happens is that when it goes back up, you'll be in profit. So to sum up this video, no, you don't need a whole lot of capital to start trading. Just a couple $100 will do. And ideally you want to start with cryptocurrency or Forex, because they've got a low capital requirement, right? They are very beginner friendly, low barrier of entry. So you can start with those, right? Not a whole lot of commission or trading costs at all. You just got to pay the spread. And if you want to know which broker to use, then click the link below. I've got some that I recommend, so just check it out, right? And also do check out my website if you want to learn more about trading. I've got a free workshop on crypto, and also I've got a Discord trading community, right? You can find signals, price alerts, a lot of good stuff over there. And I also provide mentorship or coaching, so check out my website for more details. And finally, subscribe to my YouTube channel if you like it. Give the video a thumbs up, comment, let me know what you think, and thank you for watching.